Very good evening, friends and traders. I'm Nalnakshi Swami, welcoming to my channel, Smart Index Edge. As my daily routine, it is my thing to bring about the daily levels and little bit of analysis on my side. So the levels based on the India VIX are India VIX calculated to be 11.96. Based on that, the high 24,728, daily low to be 24,420. Let us recap what has happened this week, starting from Friday last week, that is 1st August, the market came down, and on Monday there was equal V-shaped recovery, but it could not go past that level. That is the level which is VIX level. Now today we have marked that. And later, Tuesday, and this was the inside day. Monday was inside the Friday's big bar. This is the big bar. Within this, these 2 days were like this. And even on Tuesday, it was an inside bar like this. Let me mark this. Okay. It's an inside bar. So I was thinking a lot of volatility will be there in the market, but instead the market could not go past this level, and slowly it came down. And there is double top over here, and the market continued its move. RBI policy did not bring much volatility into the market, and the fall was around only 139 points. Not much fall in the market, because this level, on the 1st August level, 24,539 is acting as a support for the time being. This week it has consolidated. There is no break above this range. That means weekly breakout we are not seeing. Monday and Tuesday, Wednesday, it has made a lower low. Lower low. And we need to see, this is the, if I draw trend line, it is like this. We need to see on Thursday, because tomorrow is expiry of the first week of the August. What can happen? It can go up to this level, 24,677, because before breaching it can do like this. It can go up, or straight away it can come down, break down below this level. If it straight away breaks down below this level, we can anticipate for some sort of pullback in the market. If it starts breaking below like this, that may be around, let us check how much points it can come down. That is 133 to 100 and 52 points down. This is the daily VIX level 24,420. So this is my analysis and my setup for the tomorrow. Coming to the Bank Nifty is also nothing has happened in the Bank Nifty. It is just a inside day. You can see inside. It has traded inside the previous day low, and it is consolidated at the lower end of the previous day low. So it is, I am on the hourly chart. You can see clearly it has not gone past this low. The low made was 55,202 and the low made was 55,227. So this is the low. It is an inside bar which has formed in the market. So some sort of volatility we can anticipate and it is at the lowest level. Any up move has got resistance around 55,758 and first support is around 55,064. These are the immediate boundaries you need to mark out, and second resistance is 56,331 and first support is around 55,064. If we go to the daily chart, you can see from this level, market has rallied very strongly from Friday 13 June. The market has come to this level 13 June. It may be a pause over here, some sort of pullback before breaching this level. It may not breach at once since it is an inside bar, probably, and also a dozy type of bar. If it starts moving above this level, 55,556, market can go up to 55,758. We can anticipate. So the market, it is all at the neckline. It is at the neckline. If it breaches, there will be a huge fall even in the Bank Nifty. If I go to the daily time frame of the Nifty, let me make it still this is the neckline for the market. Still it has not breached. Same thing on the Nifty too. Nifty, the neckline comes to 24,432, 406. So any down move to this level, there may be some sort of reaction from this level. So that's why you need to keenly watch this level 24,420 to 24,460. See, the low made was 24,473. So this is the level you need to watch carefully. Suppose if the market hits this low and there may be some sort of bounce back in the market, but the longer term is bearish. I don't think there will be a reversal we can anticipate in the market very soon in the market. It has become bearish. Only if it has to become bullish, this is the VWAP, anchored VWAP, that is the level 24,797. The market has to go past the 24,800, then only we can anticipate for some sort of pullback and reversal in the market. So friends, I wish you all happy trading day. Before closing, I want to show you intraday picture also with the GAN level. Because many people are asking, let me go to the enable this GAN. I made video for the intraday time frame. Let me show the trade on the Nifty, how you could have traded. Many people are having confusion how to trade this. Actually, you must understand this is the GAN circle principle. Let me take out the I mean, drawings. Okay. Okay. So now I am on the intraday time frame, 5 minutes. There is Keltner channel also. I will disable the Keltner channel so that if you want, you can enable it and see. I will draw this. This is the principle actually. You need to understand, then only you will trade better. Lot of people are having confusion. I'm drawing a circle and I'll put a Alt C over here so that it will be divided. Next level is, let me draw like this. Okay. This is 0.6, 0.26 and next one is 0.66. Correct? I'm not able to pick up. Okay. Now let me bring this down. So this is 180 degree. Let me make it a dark line. This is 180 degree. 180 degree and this 0.26 is 30 degree angle. So angle 30 degree, here it will be converted into price levels. So by calculation, it will be converted into price levels. So this is 30 degree and this is 60 degree. And we consider this one is, top of this is 90 degree. And this one is minus. When it goes below 180 degree, it becomes minus 30 and minus 60 and this is the 90 degree. So considering based on that, this indicator has been constructed because you should understand how you could have taken trade here. See, when the market opened, I need to explain because people are asking, getting confusion that how to trade this. It is a straightforward trade actually. See, this is red color one is 0.26, 0.26, and the blue color is this is 0.66, 0.66, and then this is the median line between the 0.26 and 0.6. Then it becomes an 180 degree. Okay. This green color. And this one is minus 0.26 minus 0.26. And this is 0.66. 0.66. So this is the indicator, whether the price is positioned towards the negative side or the positive side. And in between these dotted lines are pi calculation levels based on the high low of the 5 minute. It has been calculated. I'm not going into the detail of that, and I've made video previously about this. These are the pi calculations. So based on the pi calculation, taking the first 5 minute candle, it has been high and low range has been calculated. See, you can see it has been labeled. Yeah, when you apply this indicator, you will get the levels. This is the level you are getting as a target in between levels are you are getting. So anything below it becomes a red. That means it is going negative. Below this is the small range, and in the, let me zoom it out so that you can see. This is another range high. So you will understand, but how to trade this? See, when the market opened, I will have all these levels in on my chart. These levels will be on the chart. So you know this is the boundary. And this is minus 0.26. Already on the previous day, it could not go to it is in the negative territory. This is negative zone. You can see it is negative zone. And when the market opened today here, and this is the median line. Before anything, before it is plotting, you have got all these levels on your chart. See, you can see the market opened here and the next candle was a bullish candle. Even if it is a bullish candle, this is a positive 0.26 and this is median line when compared to this present day, this one. But when price started coming below this, when a price started making and there is a rejection from this median line, it started, that is below 180 degree. Below 180 degree. That means the price is becoming negative and you can sit on the put side. You can take position on the put side. So there was a choppiness in the market. Again, you can see the market came down. Immediate reaction was there, going below this boundary at all. Boundary below this minus 0.2026. And then it retested the median line. If you could have taken the trade around this level, that would have been. Let me change it to when I saw this is a negative thing, even the RBI policy, before the announcement of the RBI policy, around 9:25 itself, market started coming down. But after the announcement, around 10:20, market retested this level. This is the level you could have entered short around this level, that is around 1020. Let me go to the put option, because when it is showing a negative thing, naturally you can go to, immediately you can go to put option. Let me put the 24,700 put option. 24,700 put option. See, you need not worry actually. It rallied, it went up and made a high of 151, immediate reaction. So if you would have thinking that it is a positive thing, you can see this is 0.66, 0.66, 0.26 and it is the median line. Immediate reaction was the negative side, but it was holding the 0.6. It did not break the cycle. If it would have gone below this and started trading below this, you could have gone short in this. Instead of that, it was a clear indication, whereas when you saw in the underlying, the market was showing weakness. Around 1020, it was gone below this and in the GAN level, GAN range low level, it tested because it is option. It came down to 100. You can see over here 100 and later market started rallying up to even the targets. You can see first target you will get 134 because it is break above the circle. It is showing there is a difference between the underlying plotting to the option premiums because This is how it is. Option premium will be very less. According to that, it is plotting like that. Whereas underlying 100 points difference will be there will not be that much difference. First 5 minute candle range will be around let me check 105 to 125. The only 20 points difference, it has to calculate for the range of 20 points difference. For that it will be compressed, these levels will be compressed. You can see how the expansion of the market you could have taken very comfortably in the market. And even after, see, at one point of time, market rallied strongly around up to around 12:20 it became. Even when it came, you should not have panicked actually. Actually, this faced as a resistance, and you should not have panicked. You could have held this position. See, so beautifully, even if you would have gone wrong, and again it came back and rallied hard to 159 and finally closed around 152. You can see this is the beauty. So let me change it to 24,700 call option. You can see yourself how it has been aligned. Around 10:20, 10 o'clock, 10:20 did not come to this level. You can see it could not go up to this level, right? See, this is the beauty of this. This broke down all the levels over here, and already it is coming down. This is extension actually. You can see over here, it is a clear picture. It has been plotted over here. When going to the 24,700 put option, see, it is at the bottom, still at the bottom. This level may act as resistance. It is acting as resistance because the expiry, tomorrow is expiry, and option premiums, or whether it is a call option or put option, they are the instruments used for hedging, and they are designed for theta decay, premium decay. So that's why it may be within the range, or tomorrow it can decay. It can come down and it can decay. It may create some panic in the market. But what it appears to be, even if it comes down to 68, it can regain its money. Suppose in case if the market rallies hard, the market will not go past this 24,700. It may face hurdle over here. The market may expire within the range of 24,700 to between the range of 24,500. Even if it goes down and comes up, it may happen to the market. Suppose if it starts moving above this level tomorrow, above 163, it can move up to 198. You know this. If it crosses in the opening bell, if it opens around above 167, you can anticipate for this level in this 24,400 put option, because this market, if it starts breaching the level, and if it starts moving below 24,574 to 24,420, it can go up to that. Market can, this put option can test that level. And here it has been sold into the premium decay. They will not, writers will not let the premium to appreciate beyond this. If it appreciates beyond this, the writers will lose money. They will see that it will not go beyond this. That is 233 points means more than 180 points. For the 180 points rally, market has to fall more than 300 points. That is how it is. 360 points fall, market has to observe, then this put option will go to 232. So I hope you understood the, let me put the index first. Again, anything, you can trade anything here. Let me apply the stock over here. You can see clearly this is the median level, minus 0.26, 0.26 and 0.66. Then see, the first candle itself is a huge candle coming down, and it has started testing the 0.66, and finally it has broken below the 0.66. Probably, so the Bharti Airtel may see continuation of the down move because it has broken below one cycle, one circle cycle it has broken below. Anything you can trade. For example, let us go to any positive stock. Let me pick up from here, from my screener. Okay. This Swiggy has rallied 2.18 percentage. See here, the movement has started. You can see it has started from the negative level, because previous day it was the 0.6 level. It started from the negative level. Here you can see 0.26 and market crossing the median level. That means it is above the 180 degree, and it crossed this level and finally it tested the target. That's how it is. You can take the trade by seeing this. I hope you practice. Once you get oriented to this indicator, understand the concept behind it, how it has been constructed. This is a simple concept. I have explained it to you. Then your trade becomes simple. Any stock you can trade with conviction. So even the Union Bank you can see so beautifully it climbed. This is the 0.26 upper boundary and median boundary. It started moving higher. You can see there. There is wide range is there. So let us go to Page Industries. Even the Page Industries became negative in the opening bell. It came down below this. Later during the day, it became positive and moved higher. That's how it is. So this is how you can make out. For example, this is a bearish thing. You can see there was no movement on the Reliance Industries. It came down and it was the negative 0.66. 0.66. It did not go below this. It traded within the range. Neither between the 0.26, and that means it has traded within this circle. So slightly moved above and it traded here. You can make out. So clearly, if you understand the concept, just a simple concept, anything above 30 degree according to Gann principle above 45 degree, that to 30 degree above 180 degree, it becomes positive. That is a simple concept. Price will become positive. If it starts moving below this, it becomes negative. Okay, friends, I've tried to explain you again how to use the indicator. I've given it to many people, this indicator. You can make use of it. And first, paper trade. Paper trade, understand the trade and then take the trend. This indicator will change your trading style. If you practice it, it will change your trading, and also it may make you profitable. Thank you very much, friends. Nannakshi Swami signing off.